Hey, good morning, everyone. Thank you for joining today's webinar. Let's get started here. So my name is Alyssa Dykman. I am a public programs project manager at BayREN, the program lead for BayREN's Targeted Decarbonization Services Program, who is helping putting on today's event in partnership with the County of Santa Clara and Sonoma County Regional Climate Protection Authority. We're excited to have you join us here today to learn more about the elective pay process and hear from local governments actively engaging in elective pay. Let's go to the next slide, please. So here is the agenda for today's webinar. So first, I will provide a quick overview about BayREN and review some housekeeping items. We'll then dive into the topic of today's webinar with an overview of the elective pay filing process and hear from two local governments about their experiences navigating the elective pay filing process. Later, we'll convene for a Q&A session with our speakers and wrap up by highlighting some additional resources to support your jurisdiction's participation in elective pay. Next slide, please. So to start off, I just want to provide a quick overview about BayREN. Next slide. So BayREN is a coalition of the Bay Area's 9 counties and the Association of Bay Area Governments. We work together to get funding from the California Public Utilities Commission to meet state and local climate goals. We do this through programs that promote energy, water, and greenhouse gas reductions for residents, small businesses, and local governments alike. Next slide. BayREN manages 10 programs spanning 4 sectors, which are shown on the slide here. Those include residential, cross-cutting, commercial, and the public sector. These programs provide the Bay Area with rebates, funding, technical assistance, education, and more. Next slide, please. So I just want to take a moment to highlight BayREN's new public sector programs, which were launched to support local governments and special districts as they work to improve the energy performance and reduce greenhouse gas emissions of their public buildings and to lead by example. The Integrated Energy Services Program focuses on providing holistic support for all energy-related building systems and includes the Energy Concierge and Energy Road Mapping services. The Energy Concierge service helps local governments staff find and access technical assistance, financing, and incentives for building improvements. And the Energy Road Mapping service provides comprehensive roadmaps for achieving energy efficiency, electrification, and resilience goals for public buildings and resilience centers. The Targeted Decarbonization Services Program, which is putting on today's webinar, is focused on building decarbonization and includes the Decarbonization Showcase and Decarbonization Education and Financing Service. The latter engages local government staff to familiarize them with operations and maintenance of decarbonization equipment and educate them about strategies for monetizing improvements to secure financing for said equipment. And the Decarbonization Showcase will assist a small number of municipal buildings to demonstrate how to reduce or eliminate carbon emissions while improving energy performance. The application period for Showcase projects is now open until March 18th, so you can get started on your application today. You can learn more about and access these services through the website listed on the slide, and we'll drop that into the chat shortly. Next slide, please. Before we get started, let's just do a quick review of Zoom functions. So we are in a Zoom webinar, so there are no video cameras. If you would like to interact with today's speakers or other participants, you can use the chat feature, but please use the Q&A function if you have a question or a comment. We'll be going through the Q&A to moderate the Q&A session later on. Next slide. And here's just a reminder of the location of the icons that you'll be able to use. You should be able to use the chat, Q&A, and raise hand functions. And if you have any questions about these, we have support staff on the line who can assist you. Next slide. Here's just a quick disclaimer. The views expressed in these presentations are those of the authors and do not necessarily reflect the position of the Association of Bay Area Governments, BayREN, or other jurisdictions that BayREN represents. Any questions pertaining to the views and information in the presentations should be directed to the authors. Next slide. And finally, BayREN is in the process of developing a policy on the use of AI services. Until that policy is in place, we ask you to not use any AI services during today's webinar. This webinar, though, is being recorded, and the slides and recording will be available on our website in about a week. Next slide. So with all that being said, let's turn to today's first speaker. Next slide. I'd like to introduce William Pierre Lewis Jr., who is a Federal Policy Associate at the Government Finance Officers Association. Based in Washington, D.C., William helps develop federal policy documents and contributes to policy-related education for public finance officials, ensuring state and local government officials have the necessary federal tools and resources to navigate complex policy changes and better serve their constituents. So let's see. Yeah, ask William to get his face on the screen here. And now take it away, William.
Thank you, Alyssa. Good afternoon, everyone. My name is William Piels Jr., as Alyssa just said, and I am from GFOA here. I'm actually today at our office here in DC, and it is a pleasure to be with everyone today. And without further ado, we're just going to dive into it. Next. Yeah, so as you guys know, the themes for today's conversation is navigating the Inflation Reduction Act's elective pay provisions. So it's basically trying to explain to you how to navigate the process of the IRA. If you have a plan in the past and there are things that weren't clear for you, and if you decide that you are going to file today, so you can understand the process and everything that it includes. Next slide. This is our team here in DC, our federal liaison office here in Washington, DC. Emily Brook is our director. Mike Bellarmino is our senior policy advisor. Jerron Brady is our policy analyst. Isabel Mew is our public finance advocacy fellow. And the last person is obviously me. And what we do here is making sure that we understand the federal policy processes and federal laws that are coming here in DC and explain to our partners and friends in different states, as we are doing here with you in the Bay Area. Next slide. So this is what the presentation will look like. Basically, we'll have a general theme, which I just mentioned from the beginning and the introduction. We'll explain why we are doing this today. We'll also go over elective pay, like what it is, what it includes, and how people can file or apply for it. And we will conclude on that note as well. Next slide. So this is the general theme of this conversation. The webinar, as I mentioned before, is navigating the Inflation Reduction Act's elective pay provisions. You can go next slide. Yeah, so the purpose here is to provide an overview of elective pay for those who aren't familiar with it. So you can learn the best practices from your jurisdictions, for example, your city, your local government, so you can go through that process. And eventually, even if it's not doing this conversation afterwards, you can connect with us so we can actually connect you with people that we may know in your area to kind of help you navigate that. And there are a group of lawyers and other organizations who also focused on IRA provisions and elective pay that will help you navigate the process to understand it better. Next slide. These are the things that we will see in details here. We will kind of go over a little bit of what is happening today and at a federal level for the IRA, especially with this new administration. We will also talk about elective pay and processes. So what are the things that are inside of it? So one of the things that we'll go over is tax filing deadlines. You need to understand that in order to even begin to plan to apply for elective pay. And we'll go over tax forms. We're not going to show the forms in this webinar, but we'll have them hyperlink afterwards. When you receive the slides, you can basically click on each link, and it will guide you to where you can see these tax forms. And after that, we'll provide additional resources for local governments like people like you. Next slide. So as we speak right now, we don't know what's going to happen with the IRA in the future. However, the the portal for people to apply, if they want to receive elective pay, that portal is still on the IRS's website. Um, if it's until it's closed, we encourage people to continue to go and to fill their form so they can apply for elective pay. Uh, the thing is, what people should understand here is that because this administration, as you guys know, or is against everything climate or green related, and because elective pay has to deal with projects that has to deal with people who are working on projects that has to deal with green energy or electric vehicles and stuff. We don't know what's going to happen in the future, but as of right now, the portal is still open and you can still apply for your IRA slash elective pay benefits. Now, the IRA, people are seeing a lot of executive orders and they're panicking because they don't know if the president or the executive branch can actually repeal IRA with executive orders. So what we want to ensure people is that you cannot, the president or the administration cannot, through executive orders, get rid of the IRA and its provisions. That's not a thing. They cannot do that. To do that, they will need to go through Congress. If they want to get rid of the IRA and its provisions, including elective pay, they will need to go through Congress to do that. And Congress could also impact the IRA through tax reform and other mechanisms through the reconciliation process. Now, as some of you may have seen last week, the Senate decided that they were going to go to reconciliation process where they didn't have to have Democrats' support to pass their bill, but they let the tax part of the tax component of that bill out. They didn't vote on tax component. They didn't vote on reform. So basically, the IRA still remain the same, and it still remain a thing as we speak because the Senate decided it was going to cost them too much time and energy, and also what it was going to cost as price to go over tax reform. Right now, they are saying that they will probably go over that later the year, or the House could go over tax reform as we know it, and that big, beautiful bill that President Trump asked them to vote on. But as of right now, the Senate voted last week. Tax reform was not part of that bill, so therefore IRA still remains the same, and people can continue to apply to get the benefits through it for elective pay. Next slide, please. So elective pay, as we explained a little bit earlier, is that it's a provision under the Inflation Reduction Act. We encourage public sector entities and nonprofit organizations to invest in clean energy projects, right? Anything that has to do with clean energy projects that respects the environment, the climate, whatever, you can when you do have these projects, after you have them, then you can apply for elective pay to receive benefits through tax credit. So elective pay, unlike grants, because grants have been existed before where people would apply for federal grants, but elective pay it's something that is relatively new when it first came out in 2022 because there was nothing like this before. Elective payment program, it's the first and one of its kind. So basically it requires a specific type of projects, which are clean energy projects, in order to be qualified for it. And then once you do that project, if it has to do with clean energy, so you know that you're going to have to go to the IRS portal, the specific form that is there for that, to apply and then to receive either part of your investment or the entire amount that you invested to accomplish or to do that project that has to do with that is related to clean energy conditions that the federal government required in order to be qualified to receive these tax credits. And Therefore, it's important that anybody in your government, in your local government, in your institutions, it's important that they know uh, how the process works in order to fill the forms the way that they are supposed to, because any mistake can prevent you from getting your elective payment, and you don't want that to happen after you spent X amount of money on a project that is clean energy related, and then yet you don't get the elective pay benefits because you made some mistake in the form. We can go to the next slides. The process, it's basically like I said, you have to pay attention to the form. You have to pay attention to the forms and the way that it works. And one of the first form in the most important form that you should pay attention to is the form 990T, and that is the pre-filling. Basically, that form is the pre-filling. So basically, it's that form that you have to file first before you even apply for elective pay. The pre-filling process, basically, before you file this form, is there for you to put all the information that you need to put there in order to be qualified to even apply and to receive elective pay. And informations are important to have. You have to have all the pieces of information in order to pre-file and file afterwards. If not, again, like I said, any mistakes can prevent you from getting your elective pay, and you don't want that to happen after big investment, for example. You want to take advantage of that provisions that is there for you. Next slide. So I can see the type of the slides because of the green line here. But basically, direct payment the elective pay and what is important, it's basically a direct payment and your tax credit will help tax exempt entities offset the cost of pursuing renewable energy projects. So basically, if you are a tax exempt institution, like you are nonprofits, like you are a school, like you are a church, you are able to apply for elective pay as long as that project that you are working on, or these projects that you are working on, they are within the clean energy area or clean energy bracket. So basically, if you're trying to build something, if it has nothing to do with clean energy, you will not, even if you were a tax exempt institution, you will not get any benefits from the elective pay. You have your projects, they have to be within the requirements for clean energy projects in order to be qualified to receive elective pay. Like I said before, you can receive part of that, of the investment that you've made, or you can receive the entire amount. For example, there are institutions, there are state and local institutions who are doing a project, and they part of their investment is tax exempt bonds. So basically, part of that money they invest is from bonds, and the other part is from their own money. When you combine these two together, the tax credit that you can receive for all of them can be up to 15%, right? Because the reason for that, if your tax exempt bond is coming from a private sector, that is different. But if you receive grant from the government, for example, right, you get grants from the government. If you take that grant money and you invest that grant money in a project that is clean energy related, it doesn't mean that you will get elective pay benefits for that project. It's almost as if, from a tax perspective, you cannot get tax credit from like a grant. It's already a grant from the federal government. They already give you that money and use that money for your project. You can't expect also, because the project it is clean energy related, you will receive tax credit from that grant. So I just wanted to make that clear as well, that when we talk about benefits from tax from energy projects investment, tax grants, federal grants are not part of it. If you invest grant money, federal grant money, to build a project that has to do with clean energy requirements, it doesn't mean that you will get tax credit, or in other words, it doesn't mean that you will get elective payment for that project for that amount of money. Now, if you do put two together, part of the money that you invest in that project that you're working on, part of it is federal grant, and part of it is internal money, capital that you already had. Yes, you will get tax credit for the money that was part of your internal capital. not for the federal grant money that you invest in that project. I hope that's clear for everyone. And the next slide. So these are the people. It's important that when you were trying to pursue elective pay, um, or elective payment benefits, before you even go there are five people, or five group of people that you need to make sure that you have in your team, because that's what is going to define the way that you are going to operate in order if you ever want to receive elective payment benefits, in other words, tax credit from your clean energy project, right? You need a finance player, right? We call that finance player because we call them players because they all have their roles here, that they play in that process. So whether the person is a CPA or not, as we mentioned here, they have to be aware of what did you purchase or what are you building, in order for them to prepare your forms for you. And that person can be anywhere in your city or in your state, right? You need a legal player. Basically, you need lawyers, and specifically tax lawyers, not any lawyers, but financial tax lawyers, right? Not all lawyers or focusing on tax. So you will need to have a tax. You need to have a tax lawyer in the team to make sure that you are filling the form the way that you are forms the way that you are supposed to do them. Um, and you need, because we are talking about clean energy project, you need someone who knows sustainability very well. You need someone who knows the environment very well. You need someone who knows, who have a background somehow in climate, right? Because we are talking about clean energy project. If you don't have that person, it will be hard to navigate your clean energy project because the person doesn't know anything about clean energy projects. The person doesn't know anything about sustainability. It will be hard for you to navigate that process when you are having when you want to pursue elective pay. So you have to make sure you have a sustainable person there that understand the environment or natural resources, etc. And you need a leader, right? And that leader can be someone who has knowledge on all these things that I just mentioned above, the three things that I just mentioned above, or the person can have knowledge on two or one of them, but that person has to be the leader to make sure that everything is going the way they are supposed to. That person doesn't have to be a lawyer. That person doesn't have to be a financial expert. That person doesn't have to be a sustainability expert either. They just have to have knowledge on these things, or at least familiar with these things, so they can lead the team in order to make sure that everyone is playing their role at the end so you can get your elective pay benefits. That's basically what that person needs. Yeah, you can go to the next slide. And these are the steps, easy steps that you should follow to receive your elective pay or to pursue elective pay, right? And as you can see here, you have to pick a tax year. We'll go later on what that means. You have to pick up a tax year, pre-filling registration. IRS will give you then the registration number. Then you file your 990T form, 990T form, and then after that you receive your elective payment as long as you follow this process. Next slide, please. I'll go a little bit faster because these are like things that we read and we wrote and you can actually go after over them afterwards because the slides will be available. So like we said, you need to determine a tax year, right? Entities that are eligible to pursue elective pay, they must identify their tax year um, to set filing due date, right? You have to respect the dates, and we will see that in the upcoming slides. What are these dates or these months that we are talking about if you want to pursue elective pay? And you have to respect the filing requirement. You have to respect filing requirement, which means you have to make sure that you pre-file before you even file. That is very, very important. And elective payment conditions, right? There are conditions that you have to respect in order to be qualified. For example, a city must establish a tax year and file tax form by the deadline to claim in order to claim elective payment, right? There are deadlines that a city has to respect in order to be qualified to even get elective payment. And filing deadlines, there you will see that later on, but city must file the form, like I said, 990 form by the 15th of day of the fifth month after the end of their tax year. For example, if do you end your tax year, for example, in December, which most people do, then by May of the next year, by the 15th of May of the next year, then you have to file the form 990, right? The tax year ends in December. Then we get to the next year. By 15th of May, May 15th of the next year, you have to file that form. That is very important. Okay. And then tax year flexibility. Some people may apply for an extension, which will go on, will go after that on. It's like, unlike, as we mentioned, unlike individuals filing from 1040, cities have not previously established a tax year. So you have to make sure if you want an extension to apply for it. Now you have two choices when you are pursuing tax elective payment. You can either do that based on your calendar year, which is January 1st to December 31st, or you can do that based on your fiscal year, if different from the calendar year that we all know. Next slide, please. So, and this is what I was talking about here. This graphic explains clearly the difference between a calendar year and a fiscal year. Calendar year starts from January to December. Fiscal year starts from January to July, right? Um, as you can see from January to July. So if you were applying, for example, at the bottom of this, you will see the second line said August to June. That's the difference because it is about a project. Now, if you are working, for example, on so for example, let's say you purchase 10 electric vehicles, like you purchase 10, I don't want to say brand names, but you purchase 10 electric vehicles, right? For place them into service because you need these vehicles to do work. You could have purchased any vehicles, but decided to do electric vehicles because that has to deal with clean energy project, because these cars, they are supposed to help us with the environment. So your calendar year is January to December here. So you have a deadline to file to say in 2024, I purchased 10 electric vehicles, right? I purchased 10 electric vehicles in 2024. You have the deadline to file to report this to the IRS on that portal 990 T by May 15, 2025. I'm talking about if you were to buy these things last year, 2024, by May 15 this year, you have to file. That's your deadline. Now, there is an extension to file for these vehicles that you purchased. There's an extension and that ends in November 15, 2025, for example, for last year's projects. You have to request that extension in order to get it. It doesn't come automatically. Let's say you buy one electric vehicle, right, in 2024, and then you let May of this year pass, 15th of May passed, you didn't file for it. And you didn't file for it, and then you're like, oh, May 16th or May 17th or June 2025, I'm going to file for this car that I bought. It's not going to work because you did not request an extension. You will get the extension for November, for example, 15th, 2025, but you have to file for that extension in order for it to happen. And I hope that's clear for everyone. Now, that is for electric vehicles. Now, we get, for example, a solar project, right? You are placing solar projects, and that can be solar panels or anything else that you're trying to get energy for housing or for your office, etc. So when you do that, let's say you have the deadline to do this, like to purchase these things, for example, from August of 2024 to June 2025, right? And that only applies for solar projects, right? So when you do that, you are then eligible to apply for elective pay for these projects. Now, for these type of projects, right, just forget about the electric vehicles. For solar panels or solar project, the initial deadline to apply for these to file for these projects, it's November 2025, and the extension deadline is May 15, 2026. But then again, to be qualified for the extension, you have to apply for it. You have to request that extension. Next slide, please. And an extension, like I was saying earlier, right? It's 6 month extension available. You can request that 6 month if you want to. And then previous filers, for example, if you filed before, if you are not a first time filer, you filed before for elective payment, if you can submit the form 8868, which once you click this link, when you receive this, you will be able to access that by your deadline, and then May 15th for many, and to get an extension. And if you need additional helps, we put some numbers there that you can call, and you can also email that email address here to get some explanation on that. Next slide. Then these are the forms that you should be aware of and to get familiar with. Reference guide, you will find that there, the things that we're talking about when it comes to deadlines. And then pre-filing requirements before you even file, like I was saying, after selecting a tax year, you have to pre-file your intention to get elective pay. If you don't do that, then you're not going to get it, right? It's important to do that. And you have to do what we call clean energy account registration. So you have to create an account, an ID.me registration, in order to be considered to receive elective pay. And then at the bottom here, we've got clean energy accounts role. So you have a clean energy officer, which is the sustainable person that I was talking about, and you have a clean energy delegate, and that can be anybody. But for the clean energy officer, this is the person who will have all access to the account that we create online. And the clean energy delegate, that person will have limited access to the account. That's why it's important that that person, the clean energy officer, should basically master all the processes when it comes to the forms that you have to apply. Next slide, please. We're almost done here. Next slide. So key information to prepare, like I was saying, the tax year, be ready to establish the city's tax year, filing year and the portal, and then you will create your account. Then you have your credentials. For IV, if you purchased when you were when you were creating that account, it's important that you have the receipt that you purchased the electric vehicles. For example, if you purchased car, and for example, power generating facilities, you will need to have the date that you started any power generating facility productions or any power generating projects, to make sure that you can give them to the IRS. And your EIN should be also available in bank information. Next slide, please. And then that one is what I just explained earlier. It's your registration number. They will give you, once you file that Form 990T, then they will give you your registration number, and you can go to all the processes. And also you will see IRS requirements to avoid fraud and etc. Next slide. I'm gonna go a little bit faster here. So these are this is the what I was talking about earlier, the calendar year filed by May 15, and in June, July fiscal years entity filed by November 15. So the deadline is different, depends on when your tax year or your fiscal year ends. And these are the forms that you will need to get familiar with. And once you click these links, they will send you to these forms so you can understand based on the form that you need. And their explanation is next to them based on the project that you are working on. These are the forms that you will need. Next slide. And in processing times, we don't know. Usually it takes 40 days for IRS to process everything after you submit all the forms, but it depends. Sometimes it takes the IRS more days than 40 days, and sometimes people receive their benefits way longer than that, in months. They receive their benefits. So we can go to the next slide. Build a strong team, like I was saying before, and you can go in details to see all the major players that you will need for your team, which I explained earlier. Next slide. And these are the resources if you do need additional information, additional explanations from the Lawyers for Good Government website, that you can see everything there when it comes to pursuing or applying for elective payment benefits in order to prepare your team, but also to be qualified and to get the benefits at the end. Next slide. I think that will be all. And thank you for listening. I hope that was clear enough. We had to wrap up and we had to do this fast. However, the slides are there. They will be available. And if you do have any additional questions, you can actually reach out to Elisa or us. She can give you our email addresses and you can follow up with us. Thank you.
So much, William. That was really informative. And I think really some of your comments regarding sort of that curation of a team to putting the project in service definitely resonates with our audience and is something that will be touched on by our next speakers. So now that we've had sort of this introduction and orientation to elective pay, let's turn to how local governments are navigating this complex process on the ground. And as a reminder, if you have any questions, feel free to enter them into the Q&A and we will try to get to them. So I'll now introduce two of the speakers who will discuss the County of Santa Clara's current efforts to claim tax credits for clean energy projects that went into service in 2024 and share out lessons learned. You can go to the next slide and share out lessons learned. So our first speaker, Jasneet Sharma, is the director for the county's Office of Sustainability and Resilience, where she provides leadership in implementing the county's goals of reducing greenhouse gas emissions, adapting to climate change, and enhancing natural resources and community health. She is joined by a consultant for the county, Danielle Bradley, the National Credits and Incentives Leader at MGO. Danielle leads a team specialized in unlocking unprecedented value for organizations and governments by optimizing federal, state, and international tax credits and incentives. So take it away.
Thanks, Alyssa. Morning, everyone. Again, Jasneet Sharma here with the County of Santa Clara. And I think the parts that William spoke to about what's the role of a sustainability player in all of this, I think that really resonated with me as well, as that was pretty much one of the big roles our office took on when we heard about elective pay about 2 years ago when we attended a Urban Sustainability Directors Network conference. And that's the first time our office and our team heard about this as well. So I wanted to start by giving a little bit of context about the county as an organization. We are a really large organization, if you already did not know that. We're about 23,000 employees, and very recently, we just started the process of procuring another hospital, which will add another nearly 2,000 more employees to our base. But it also means that the portfolio of buildings that we manage and assets that we manage is huge. And just as an example, we have about 20 different county sites and facilities that we manage. And these could range from small, simple garages with furnaces. We have fuel cell generators. We have 3 hospitals. Like I said, the 4th one we're in the process of procuring. So they have a heavy reliance on steam systems as well. Other types of buildings we have is offices, labs, correctional facilities, health clinics, and many more. And the reason I'm mentioning this is that the County Board of Supervisors in 2023 adopted a carbon neutrality by 2030 plan for our operations. So it really helps you also see that we are now doing everything that we can to really put forward a lot of these efforts and initiatives to decarbonize our own operations, whether it's through our facilities, whether it's through our fleet as well. So I gave you all a little insight into what our facilities look like. Similarly, fleet electrification, which I know all of us local governments are trying to meet the advanced clean air rules that CARB has put forward for our facilities as well. So our goal, we have about 32% of our fleet actually is in some way hybrid or alternate fuel as well. Like I said, we have a total of 726 in number fleet as well at this time that meet that clean energy requirement. We're also installing electric vehicle charging stations as fast as we can. Right now, we have about 302 level 2 charging stations at our county-owned facilities, and we have another 174 level 2 and DC fast charging ports that will be added on in the next 2 years. And we've constantly are applying for, in the past, federal grants, but now more state grants to install additional level 2 and DC fast charging infrastructure as well. And then solar is something we've actually been doing since 2011. Unfortunately, direct pay just came in 2 years or a year ago. But since 2011, we've already installed about 17 megawatt of solar on county facilities and county sites, and now are in the middle of installation about 12 megawatt more of solar, and actually 5 megawatt of energy storage. We have a microgrid, some microgrid studies going on as well at the same time. Something that became evident to me, and I wanted to flag for you all as you all are thinking about your solar projects, is when the county started working on its solar projects about a decade or so ago, we utilized an approach whereby which we have a power purchase agreement with a third-party installer. So what that means is they are the ones that are installing the equipment, they maintain it. So in essence, they also own the solar system, even though it's on county property. Now, what that means for us is we're not eligible to apply for tax credit for those solar installations that we're making, as that third party will be the one that will be assessing the tax credit. So just wanted to flag, if you are taking on these type of solar projects, how you establish those agreements with your vendors that's going to be helping you out is going to be critical as well in this process. And then we have a lot of carbon sequestration related work that we're looking at. So we anticipate some of this might result in some energy generation projects as well in the future. So I just wanted to give you all this context and overview of, what are the different types of projects that we as a county are taking on or are actively working on. So if it's not evident by then, our office does not do direct project implementation. What we really do is support our other departments. We have facilities and fleet. We have our parks department. We have roads and airports. So we have several of these departments that are actually the ones that take on the operational aspects. So we support them in implementing several of their projects. So our focus when we heard about this aspect was, okay, how do we bring all the departments together? Firstly, to understand what are the different energy projects that are underway already. This started by, like I said, we organized a meeting based on who we knew were some of the key players in this area. We brought them all together for a one-time meeting. Most important group that we included in there was our Office of Budget and Analysis, and whoever are your financial people in your city. Every organization has a different name for them. For us, it's Office of Budget and Analysis. But really, we pulled them in very early on into this process, even at the first meeting, because what became very evident in the first meeting itself was, we already have a solar project that's going to go live last year, and that was actually county owned on one of our hospitals. Yes, we're procuring all of these electric fleet, but who's going to lead on this effort? Who's going to do that pre-filing? We can't have every department do this individually. So which department is going to do that? And having that fiscal team in there from the get-go was so important, because they were the ones that went to our leadership, in essence, to our budget director and to our county executive, pitched this project, this concept to them, and came back with a solution which said, the controller's office will lead the pre-filing and all of the paperwork and the process that goes with it. So again, having the right people at the table was very important. And our role has been to create more of the standard procedures and help create the process as well. And Danielle can speak more to how they're coordinating with the departments, because the controller's office brought in a consultant to support the project. So I just wanted to share maybe some lessons and key takeaways from our experience, as this is the first time we're actually going to do the filing with our consultant support as well. So yes, it does take a lot of time to bring everyone together. No surprise there. But once we did it, once we kind of had the key leadership on board, and then, when Danielle and her team came on to support us, I think we almost, as the sustainability team, could take a backseat. Now my conversations with the departments really are more on, okay, what projects can we keep moving forward? How do we really do this in a systematic manner? Are there some projects that we can fast track because we likely know the risk of these credits going away? So kind of the focus of my conversations with our departments has shifted a little bit. So again, like I would say is, to all of the sustainability staff that are in here, I would say the most important role you can play is by bringing together some of the key departments and the key departmental players. And one thing that we are in the very early stages of exploring is the reimbursements or the funding that we get back as tax credits. We are trying to make sure that it doesn't just go back into our general fund or into our contingency reserve. So we're really trying to come up with a process of how can that funding that we recover from the federal government, how can we reinvest that in future projects, or set it aside for future sustainability projects as well. So yeah, that's a quick overview from me, and Danielle, I'll hand off to you now.
Hi, everyone. As mentioned, Danielle Bradley, I lead our credits and incentives team. So when we engage with clients of ours, I like to set the lens of there's two major timelines. We have anything up at that point of time that's already been expensed, you have incurred, potentially placed those projects in service. And then there's more of the strategic lens for anything moving forward that you may have plans for investing. Depending on the type of credit with the overview that was provided, those will differ depending on how you're using funds, but also potentially locations and where those investments are occurring. So, for example, when we come in and provide a little bit more of that strategic lens of how best to plan or strategize where recharging stations or alternative fueling stations will be had, that credit specifically does have a location requirement. So if you are planning those type of investments, I recommend connecting with an advisor who can confirm whether those are in an eligible location. So that way you're not placing in service in an area that may not be eligible when you could have had it at a alternate location instead. So that's more of the strategic lens of an example of how best to maximize your use of investments of where those may be occurring. In terms of how we come in from the starting point, we assess a lot of those eligible projects and that timeline consideration. So earlier with what William shared on that screen that demonstrated some of the timeline considerations for EVs versus a solar project, what we do is come in and identify what are the eligible projects or expenses, and therefore what tax year may make the most sense for filing. Because of the uncertainty as well, or potential risk of these credits going away, we do have some clients that may have initially done calendar year, shifting to fiscal year, or maybe doing a calendar year followed by a calendar year and potentially a fiscal year filing for the following year, which therefore means that you'll have a short period. So you are able to transition as well from a calendar year filing to a fiscal year filing. And we do have some of our clients right now in process or planning to do that for 2025 as we continue to also monitor any tax reform bills that may be coming out, or any bills proposed that may put potentially at risk those credits and use of those credits moving forward. So as you're looking at that tax year identification, that also is something that you input as an entry in pre-filing registration. So that's definitely a consideration to think about at the early stages of this, is what tax year may also make the most sense from a strategic standpoint, so that way you're maximizing the use of those credits in consideration of potential legislation changes as well. Also, from that strategic lens and standpoint, as mentioned, is the use of funds or potential grants or funding that you may be utilizing. So depending on the type of credit, those will differ. The example was given earlier of the investment tax credit or production tax credit, and those are in the case that you're investing in solar, for example, and you have tax exempt funding that you're using, that being kept at a potential reduction of 15%. That does differ in terms of grant or tax exempt finance and funding for electric vehicles, for example. So depending on the type of investment that you're making, it's best to connect with an advisor who can also let you know strategically how you're planning to use those funds if you haven't yet already allocated those. So that way you can maximize potential credits as well while still utilizing some of those grants or tax exempt financing. So that's where we also have come in with our clients, just to identify not only location dependencies, but fund dependencies. That way you can maximize what you're doing. And so aside from that, those are the major considerations I just wanted to add. The other item, as mentioned from a finance team or personnel, is the best way to track some of those expenses or labor costs. So there are certain methodologies that may make it easier to identify those use of costs or your relationship with particular contractors that will allow you to also maximize more of those expenses once you get to the process of filing for the tax credit. But happy to address if anyone has any questions further, and I know that we'll have that Q&A, but hopefully the identification of some of those considerations helps provide a little bit more of the lens of how to think about the credits and expenses from a strategic standpoint.
Great. Thank you both so much for that informative and insightful presentation. It's great to hear how a Bay Area local government climate action goals are being realized and acted upon with the help of elected pay. So we'll now turn to Jonathan or Johnny Rogers, who will share insights into how Denver has successfully claimed elective pay tax credits and their innovative approach for reinvesting elective pay rebates into their community. Johnny is the acting Deputy Executive Director of Denver's Office of Climate Action, Sustainability, and Resilience. His division leads Denver's climate action policy and regulatory work, administers community-focused rebate and incentive programs, and implements lead by example municipal projects. Take it away, Johnny.
Hey, thank you so much. Hi, everyone. Jonathan Rogers, please call me Johnny. Looking forward to talking with you about how Denver has taken advantage of the direct pay opportunities. You can go to the next slide. I think, first and foremost, something that we know really sets us apart is our climate protection fund. So, maybe above and beyond all of the direct pay opportunities out there, if you can convince your taxpayers to pass a dedicated sales tax or other potential revenue stream to help support your climate action work, I can't recommend it enough. It has been transformative for our ability to have consistent programs in the work that we do, both investments in the community and leading by example as a city. This in Denver was passed in 2020. The 0.25% sales tax raises between $40 and $50 million per year with 6 specific allowable uses that we can invest that money in. So importantly, in regards to direct pay, it means we've been able to pay cash for our projects, which has greatly simplified the application process. There is a lot of nuance in terms of if you're using, tax exempt municipal bonds or the power purchase agreements and working out arrangements with your developer or your financer in terms of who's able to claim the credits and how they may flow back to your community to be able to claim. Our agency, CASR, Climate Action, Sustainability, and Resiliency, has stepped up as the capital project manager for all things solar, battery storage, and EV charging. And then we've worked with other agencies on the purchase of vehicles and for things like ground source heat pumps, making sure that we are, collecting all of the many forms and documentation and supporting documentation that's needed to successfully claim credits, and then working with we hire a third-party tax advisor every year to file on our behalf, which has been very useful in our particular instance. You can go to the next slide. A little bit about the project portfolio that we've been able to achieve, really, take a lot of interest in. You got to make sure that first and foremost, your site is well suited to the thing that you are developing. For solar, little to no shade obstructions. We're looking at, creating co-benefits on things like solar covered parking to reduce heat islands and improve the experience of folks who are going to rec centers or high schools or other places that we're locating our projects. Our solar portfolio, we're looking at now equipping with battery storage and turning those rec centers and high schools into resilience hubs in the case of grid outages, piloting some of our first ground source heat pumps at various rec centers and schools and maintenance sites, and just continuing to expand and approach every project with a kind of yes and mentality. We want to be visible to the community, and we want to maximize community benefits in everything that we do. And then the IRA direct pay provisions came out, right place, right time for us. I think the prior speakers are talking about, they were ahead of Denver and investing in these things back in 2011 and missed some opportunity to claim credits where it really fell into our lap in a very good way. Next slide here. Before I talk about Denver's projects and how we've captured it for our own purposes, we do have the resources to offer grants to the community, and then we've put into the contact provisions for when someone accepts a grant from us. The example here being the Greater Park Hill Community Center. Denver fully paid for 100% of the cost for a 30 kilowatt solar installation. The site hosts a food pantry, among other community services. In their contract, they agreed to submit the tax filing to the IRS. They received over $20,000 back and then remitted that payment to Denver, which we can put back into the fund that we have available to issue more grants to the community. So this was one unique way that we created kind of a reinvestment mechanism from those that we're working with. We do have it set up where if a nonprofit does have the means that they're able to bring, have some skin in the game, bring some cash to help with their project costs, they would get to keep the IRA direct pay check. But in the case where, Denver's paying for the cost of the project, we want that money back so we can reinvest in the community. Next slide. All right, so now talking about our project portfolio, our projects being placed in service. The fund was created end of 2020, took a year or so for a lot of administrative activities to fall into place. Projects really started getting contracted and constructed in 2023 or 2022 and 2023, but not really placed in service until last year, 2024. So we were able to claim about over $1 million in solar projects, in particular, only one electric vehicle, one EV charger from the 2023 in-service tax year. But this next year, 2024, we're expecting over $10 million recoverable. And then 2025, those numbers will actually go up more as our project portfolio continues to be fleshed out, contracts signed, notice of intent to proceed to installation and design work is completed. We've got a pretty healthy pipeline of investment, and then we're covering those credits, figuring out the process for how do we reinvest, which I'll get to in a slide or two here. Next slide. We've also been very lucky on the low income communities solar bonus credits. The headline here, good luck. It is highly competitive. These statistics show the first cycle that we applied to, where there was only 100 megawatts of capacity available for projects located in a low income community, and over 3,000 megawatts that had been submitted to Department of Energy. So very slim chance that we would be selected, but about half of our projects were. So these are the kinds of things that I wouldn't count on being available to you and being kind of make or break for your project financials. But if you're able to get it, it's a really nice boost where some of our projects have been able to claim the higher amount. It's either or, so getting the 20% in addition to the 30% base credit. So 50% back on your investment is substantial. and then really enabling of additional high value work. This step comes before your pre-registrations with the IRS, and you need to make sure that you have the letter of approval from the DOE before you submit your tax filing or included with your tax filing. There's no retroactive application of the bonus credits. Next slide. A little bit into the process here, knowing we're a big bureaucracy like everybody else. There's always roles that need to be established, other agencies that we need to work with, people that need to be informed. And the center part of this chart, that creating our new non-grant federal special revenue funds, is perhaps the most important thing that we did in all of this, so that once we got a check back from the Treasury, it doesn't just get deposited into the city's general fund where we'll never see it again. It goes into a specific fund with specific uses that the executive director of the climate office can then redirect those investments into things like building electrification, energy efficiency, solar and storage, and so on. So I think that piece is really critical to take away, and you're going to have to work with folks in your Department of Finance or other agencies and executive and political leadership to make sure that they're comfortable with establishing that similar location where you're going to deposit the check, so that you can use it and really maximize the reinvestment opportunity that direct pay creates. Going back to the left side of the chart, submitting our returns, an eligible project needs to be placed in service in the applicable tax year. So we're making sure that things were placed in service before December 31st, 2024. The Denver team, our office, pre-registers the projects with the IRS prior to doing any kind of tax filing. You need those pre-registration numbers to be included on your submission. We actually fill out the first draft of all of our tax forms. We built ourselves some spreadsheets and tools, and there's great resources from Lawyers for Good Government and groups that were out there trying to help different communities navigate these processes. That's made our relationship with a third-party tax advisor much easier. We're effectively giving them things that they just need to double check and make sure that we've checked all the right boxes, put the right dollar amounts in the right, in the right places, double check our supporting information. If you're going to contract them to try to do everything for you and compile information, you're going to, I think, see a really big dollar amount in terms of what they want to do all of that work. As much as you're able to do yourself will help to make sure that that's a really favorable contract for you financially, where you'll be paying tens of thousands of dollars, in our case where we're trying to claim $10 million back, as opposed to say hundreds of thousands of dollars for a lot of time and energy doing that work. Once everything's submitted, the Treasury should send a check back to you, and hopefully have one of these funds set up so it can go to a place that you can quickly reuse it. Next slide. So how do we do this? And some of the other speakers talked about this, having a champion, both agency and individual, that can really know the ins and outs of the direct pay process and make sure that things don't fall through the cracks. We've definitely seen, in asking other agencies or city officials to help, everyone's got a full-time job. They've got other responsibilities or metrics that their performance is measured against, and helping us, claim these tax credits isn't necessarily in that, scope of work or their, priority list. So as much as we can, take the burden off of them, that has been very, very helpful to make sure that things don't get missed. You stay on top of your schedules, and you're able to really maximize the opportunity that direct pay creates. In Denver's case, that was me, and then I've tapped a few other people on the team to help be highly supportive and familiar with everything that we need to do. We went on a road show and presented the ins and outs of direct pay to the legal team, finance team, other capital agencies that are building projects that we want them to tell us, like, hey, what is your heating system, or are you installing EV chargers, or doing things that we may or may not know about, our political leadership, so that once they see the dollar amounts that we're able to recover, they will help provide encouragement to our other agency partners that this is a good use of their time, and they should, help us answer questions or make sure that we don't miss our filing deadlines. Key questions that you're going to be asked, are you sure you know what actually can be claimed as an eligible expense? Before your project, who's paying for those costs? If there is a third party, how does that impact your eligible tax basis? Who's maintaining the list of all of the projects that are out there that you might be able to claim? Who's going to fill out the forms, upload the files, hit submit? We had to find the city controller is the only person who has the signature authority to say, yes, you can file our tax returns, and needed to add their signature to several of those pages. Where's the direct paycheck going to get sent to, and where's it going to be deposited? And do you have guidelines in place in terms of where it gets spent next to create that reinvestment opportunity? And I think last slide. So nothing you haven't already heard before, but the Inflation Reduction Act, enables us to claim money for projects that, in Denver's case, we're already committed to investing in, and has now opened the door for new investments thanks to the dollars we're able to claim. Can't emphasize enough, we worked with City Council to pass ordinances to establish our federal revenue funds to collect and then reinvest these dollars. And that's, third bullet point is, we're looking at this as a reinvestment opportunity. And if we can get 30% to 50% back on a lot of this work, then it enables, one capital appropriation to, pay for itself again and again. So we've been really excited and encouraged by this, obviously watching the federal landscape with some concern, but are hopeful that, the changes to the IRA would require acts of Congress that may take a lot of time or be very politically unfavorable to try to roll back. So we're hopeful that these provisions will continue to be there for us for the next several years to capitalize on. I believe that's it for me, and appreciate the opportunity to share what Denver's done here, and looking forward to the conversation.
Thanks so much, Johnny. That was a really informative presentation, really impressive efforts coming out of Denver. It's always really inspiring to hear about how a local government who has already successfully claimed the rebates are actually putting those funds back into the community. So we'll now turn to our Q&A session. So today's Q&A, I can go to the next slide, will be moderated by Tanya Narth, Chief Deputy Executive Director for Sonoma County Transportation Authority and Regional Climate Protection Authority. Tanya is responsible for developing RCPA's countywide climate strategy, coordinating climate action planning for RCPA's 10-member jurisdictions, and securing outside funding for climate action planning and implementation in each member jurisdiction and for RCPA-led programs. She is also the Sonoma County lead for BayREN. So before turning it over to Tanya, I'd like to remind you all to please drop in your questions, should you have any, in the Q&A function, or I think you can also raise your hand. So let's get started.
All right. Thank you, Alyssa. And a big thank you again to our panelists for sharing all of this excellent information with us. I'm going to start with a couple of questions that were included in the Q&A. And just a note that we have been able to answer most of the questions that were posted there. So please take a look. And we will also publish the responses to all of the questions in case we don't get through everything here today. So first question that was in the Q&A. About the pre-filing. We've heard that pre-filing requires making an IRS ID that is linked to a Social Security number. Is there a way around this so public servants don't have to link the account with their Social Security number? William, that's probably a good question for you.
I'm sorry. I answered one question in the chat. I'm not sure if this is the one that you're referring to.
This was about when you do your pre-filing and have to create an IRS ID. Does it require putting in a Social Security number that would link an individual to the application?
I'm not sure about if you have to put a Social Security number or not, but I do know they will provide you with a EIN number, and that EIN number will be the one that you do all the transaction and all the forms that you will be doing afterwards. And I assume, and that's probably a question that a lawyer can answer. In one of the resources that I shared there on the last page of the slides, you will see that. And I assume the reason they provided there's an EIN, it's because they wouldn't want people to use their personal social security number, which I would assume.
Okay, great. Thank you. Let's see, another question that I have for the panel. So recognizing the uncertainty of elective pay, are there components of the elective pay filing process that you could use for other efforts? So for example, grant opportunities. Just a way of thinking about this work that's being done to file. Is it something that you think could be leveraged for other opportunities? And anyone on the panel could answer that.
I can speak to it in Denver.
Great.
I think by the time you're doing your tax filing, your project has already been placed in service, so you've probably missed the boat on a grant opportunity. We've definitely looked to leverage grants, at the time of project scoping. And, in the case of, you show the map of different solar projects Denver has built around the city. Some of those have been supported by state grant dollars. So I think it's earlier in your process as you're, figuring out what do I want to build? How am I going to fund it? We're obviously always turning over every rock that we can to find more dollars or find contributors, and state grants were a great revenue source for us. And those did not reduce our eligible tax basis that we were then able to claim for the IRA. I think it is different if it was a federal grant dollars or pass through federal grant. So I think look for state grant opportunities. At least that worked really well in Colorado. Might be different, depending on where you're located. California, assuming that a lot of folks on this call are California oriented, probably have some good resources to take advantage of. And then, can't hurt, might help you down the road. But once you're doing your filing, it's a done project. It's in service.
Tanya, I can add to that. Yeah. We recently were applying for a state grant for EV infrastructure, and that had a match requirement as well. So I think that was one way in which we were able to sell the project to leadership as well, because we said, hey, we'll be able to recover a lot of the costs through IRA, and that just made it easier for us to get the buy-in that we needed to move forward with applying for that grant.
Okay, great. Thank you. Let's see. I don't see any more questions in the chat or the Q&A, so I'll open it up here. If anyone would like to ask a question live, please go ahead and raise your hand, and we'd be happy to address that. And I do have a couple more questions on my list if no one else has questions, but wanted to open it up to the group for a moment.
And Tanya, I was writing in chat for the question about the Social Security or accessing of the portal. So it is a multi-step process to be able to access the portal, to be able to pre-file and register those associated credits that is tied to an individual, which would be linked to a Social Security number. Once an individual does have access or verification through ID.me, then as you go in, you can register the associated entity, which through conversation and what we've been discussing is done tied to an EIN. So if a county or a city has multiple departments associated with the same EIN, that's a consideration that all of those are attributed to one filing. From that entity registration, you then have the ability to pre-file register the associated credits. So all of the associated eligible expenses relating to vehicles or any investment tax credits. So it is a multi-step process. When you have the ability to register the entity, you authorize particular users. One, as mentioned with the master, will be the clean energy officer. That doesn't necessarily need to be someone specific at the city or county if you prefer. So for example, for myself, typically for our clients, I'm designated as the clean energy officer. So that's a consideration as you're working through that multi-step process, if you would prefer for it not to be tied to someone specific at the city or county for that registration.
Okay, great. Thank you. Let's see. I have another question for our panel, which is, And I think if folks take a look at the resources that have been provided as part of this webinar, it can be overwhelming. There's a lot of resources out there, a lot of tools that you can access. So I'm curious from our panelists if you have like a top 2 or 3 resources or pieces of advice that really helped you as you got started in this process. Yeah, Johnny?
Yeah, one of the things that we needed to figure out was, the tax forms that you need to fill out are, page after page after page, but there's only a very small number of boxes that you actually need to put numbers in. And it took a lot of trying to read the rules and understand what really goes where, and the instructions have cross references, within itself. So it's a complicated mess. We worked to try to wrap our heads around it. Lawyers for Good Government was a great resource, and they provided some annotated tax documents that I think are up on their website that I think would be very helpful to anyone trying to go through this, because then you'll know, all right, here's my starting point of what I need to fill in, and then hire your tax advisor or whoever it is that you're working with to double check and make sure that you got it right. But it'll be much more approachable for you with that as a starting point, rather than trying to start from scratch and read the instructions on the forms, because they're just so complicated.
Great, thank you.
Yeah, Tanya,
Jasneet?
I would agree with that. And you've been at the same conference where we received the messaging and through USD, and I know that's coming through the Lawyers for Good Government as well. So those initial kind of slide decks were very helpful, as even we were trying to understand what projects does this even cover. They mentioned like a range of 12 different types of projects for us to even understand, okay, what is it? Which ones are we taking on? That those early slide decks to us were really helpful. And don't disagree with Johnny. The other stuff is really complicated. So we're glad that Danielle and her team is there to walk us, or at least make sure we're getting that aspect right.
Great, thank you. Let's see. So another question for you. Jasneet and Johnny, you're both from obviously very large organizations, have a lot of resources available to you. So I'm curious, what advice would you give to smaller jurisdictions? What parts of the elective pay process required the most staff time, and how can smaller governments prepare to be successful?
And, as big of a government as Denver is, it almost makes it more complicated in some ways, because there are so many people that just need to be informed. And I kind of find getting anything done in a big bureaucracy, there's 500 people I need to convince to say yes. And if any one of them says no, then like, okay, that's it. So, at the end of the day, it takes one champion. Doesn't matter how big or small your government is, and identify that champion, and they can be the ones to really help you navigate the process. So I think don't be daunted if you're from a small agency, where there's a will, there's a way, and it might actually be beneficial to you to be a part of a small group, because you're going to get the answers that you need more quickly.
And I'd agree with that. In addition, what I would add is that being a big government or agency also means we have bigger budgets. So I think, the return or the reimbursement that you get sometimes might just be viewed as like, is that worth our time and effort as well? So we almost have to show a sizable return for us as an agency to participate in something, versus I feel like the smaller organizations, the smaller cities and towns, leadership might be more willing to come on, because those smaller, we're going to get 300,000 back, 400,000 back for this project. It could be a lot as a percentage of their budget as well. So I feel like it might be just received very differently.
Great, thank you. So I've got a question here from the Q&A that I think Danielle would be a good person to answer, which is there a percentage of project costs that tax credits can be assessed?
And that is it depends depending on the type of investment or tax credit. So for example, some of the credits have a ceiling or a cap limitation on how much will be eligible on a particular investment. So electric vehicles, for example, are one of those where depending on what type of vehicle, the size, as well as additional considerations. That'll be capped at about 7,500 for passenger-based vehicles, but greater if it is a bus, for example. And there's also some of those considerations by the particular use of funds that may be applicable if you're using tax-exempt bonds or any particular grants for financing. In the case of the recharging stations, those have a ceiling of up to 100,000 on a per equipment or per charger basis. And that's both in the cost of what would be considered direct for that charger, but if you're installing multiple chargers, which typically we have our clients, there's some shared allocated costs of additional costs that are attributed to each of those chargers as well. One of the major distinctions with that credit, as well as with the investment tax credit, which is the case of solar energy, microgrids have been mentioned in this webinar as well, is whether or not you meet prevailing wage or apprenticeship requirements as well. So depending on your contract terms, those will create a different rate of return. The greatest return that you're going to see that's flexible with some of the considerations, and Johnny mentioned some of those additors or that low income bonus program, is going to be the investment tax credit. And that from a low end will be 6%, but could be all the way up to a 70% point of return. So there's multiple considerations depending on what project you're planning on investing in and thinking from that strategic lens. But I'll also put in chat just our website that has a landing page with what those credits are more specifically, and either the ceiling caps or what those ranges will be for reference as well.
Great, thank you. Let's see, we probably have time for one or two more questions. So I will ask this one. How did your jurisdiction handle the upfront financing of projects before receiving the elective pay refund? How did you account for the elective pay refund in your jurisdiction's budget planning process? And what advice would you give to local governments who are concerned about cash flow while waiting for the refund?
Yeah, I know we're an outlier here, and I emphasized it at the start of my presentation, but if you can get yourself a climate protection fund, you can make a lot of things happen. So we were not expecting the IRA benefits, and then it was right place at the right time because we had a dedicated revenue stream to make these investments regardless. So very, very fortunate in Denver, and now it's just clear communication with our leadership in terms of, well, here's the money that we expect to get back, here's when we expect it to be received, here's how we account for it in the upcoming annual budget process. So it just kind of flows now as just dollars that we have available as part of annual budgeting. Yeah.
All right, Jesney, anything to add?
I think it's similar for us. We have a fairly large capital planning process as well. So like I'd mentioned, several of these solar projects for us date back to more than a decade, and a mechanism had already been established. So I think it's almost at this point, we have to find a way to reverse that mechanism. Our power purchase agreements are expiring soon. So I think that's a good time, considering or assuming that these elective pay program remains over the next several years, then I think it's a good time for us to revisit is how do we really want to take on our solar projects? Again, I think as a county, we're fortunate that we do have a much larger budget to take on those projects and absorb that time period between receiving the refund. So we do have the ability to stretch ourselves there. I don't know to what extent some of the smaller agencies would be looking at local financing options and some of that. I do know there are organizations like the iBank in California and some of those, the green financing. So I think it might be time to get a little bit creative because they don't charge as much of an interest rate. So maybe getting a little bit creative on where you're getting that initial financing as well, that kind of help you tide over that period before your investment comes back.
Great, thank you.
Yeah, honestly, the Colorado Clean Energy Fund is a green bank that has specific products now to help with upfront financing or bridge loans in terms of, getting to the point when the check is received from the Treasury, and then you can buy down your financing costs or repay the lender. So sounds like similar things in California, but definitely worth looking into.
Great, thank you. So I've got one last question here just to make sure that we have our timing clear in terms of the deadlines and the process for filing an extension. So there was a question about and this is a question for William. So for the fiscal year 2024-2025, so July 2024 to June 2025, could you clarify or confirm the both the initial filing deadline and the extended filing deadline, and then what the process would be to ask for that extension?
So I don't know what is the process look like. I'm going to start with the last questions. I don't know what the process looked like per se. Again, that will be for that is a tax lawyer question. However, the deadline for this, the initial deadline, if we're talking about the July 2024 to June 2025, that will be November 15, 2025.
Okay.
That's the initial deadline. The extension will be, if you want to apply for an extension, the date for that, it has to be by May 15, 2026.
Okay, great.
I hope that's clear. But for the process to go through that extension, it's based on, in fact, one of the resources that we have in the last page of the slide, you will see how you can apply for an extension that Lawyers for Good Government governments prepare for us. Yeah.
Great, thank you. All right, I see that we are almost out of time, so I'm going to go ahead and wrap up the Q&A and turn it back over to Alyssa. Thank you all.
Thank you all for that conversation. What a great panel. I think there are a couple of outstanding questions I think that some of our panelists are getting to in the chat. So if anybody has any outstanding questions, type them in very quickly and we'll try to get to them. So next slide. Before I want to highlight some additional resources, we would greatly appreciate your feedback about today's webinar. So a brief evaluation poll should pop up on your screen momentarily, and we ask you to please take the time now to fill this out so we can improve our offerings in the future. And should you have any additional questions or comments about today's webinar, you can contact us at publicbuildings@bayren.org. I think the poll should be launched. Let's see. And then if you could go to the next slide, please feel free to fill this out as we wrap up. So to help assist your agency in navigating the elective pay process, we have prepared the following handouts, which are provided to you via email right before this event around 10:30. And we'll be sharing these again via email and posting them on our website in the coming week. This includes a compilation of elective pay resources and tools and technical assistance, the IRS chart of elective pay eligible tax credits, and a case story about the City and County of Denver's projects funded in part by the elective pay tax credits. Next slide. So as mentioned, the aforementioned handouts, a recording of the webinar along with presentation slides will be available on BayREN's website link provided here in about a week. And with that, we are at 12:29. We encourage you to please fill out this survey now while you are all here. We really appreciate your feedback. Next slide. And again, that is our contact email. We really appreciate you all attending today. And thank you again for our wonderful speakers who provide a really informative information regarding this very complex process. So thank you all for joining. Please continue to fill out that survey and have a good rest of your day.